How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. In today's topic, I want to discuss decreasing term life insurance and how you could actually save thousands of dollars with decreasing term life insurance rather than going with an actual decreasing term life insurance policy, and show you exactly what is the purpose of decreasing term life insurance, and then how to essentially utilize something I deem in-house as a laddering strategy to make sure that you are decreasing with your term life insurance every single year. Now, there's some companies out there, there's not that many, but they have something known as a decreasing term life insurance policy, and they name it different. It's different sorts of, a different array of names for it. But essentially what happens is the number one reason why anybody gets decreasing term life insurance is based upon a specific debt and or mortgage. Okay? So if you understand that you just purchased a mortgage, you just purchased a home and you have a 30-year mortgage, you're going to have a lot of life insurance agents. They're going to come to you and they're going to say, oh, mortgage protection, mortgage protection. You want to have a decreasing term life insurance policy. Well, rather than actually doing it that way, meaning that, okay, from the first year, let's say that you start off with, $300,000, and your life insurance coverage, let's say the next year, might go down to $280,000, it might go down to $260,000. Every single year that surpasses will decrease the amount of coverage that you have. And so typically they say that your mortgage should get paid off within 30 years. So therefore, by the time you have 5 years left, you're only going to have, upwards of maybe $50,000 left in that mortgage, or $20,000 left in that mortgage, whatever that sort of calculation is. Well, because there's such few companies that actually offer that decreasing term life insurance, it's very simple. But they also do not have that competitive of rates. It is, and I've noticed that about 9 times out of 10, that if you actually go and you have the same scenario and you have a 30-year decreasing term life insurance for X amount of dollars every single month that you would have to pay for, it would actually be more cost efficient if you have a 10-year term for $100,000, a 20-year term for $100,000, and a 30-year term for $100,000. Now, from day one, you have 3 separate life insurance policies, right? Rather than the one life insurance policy that just keeps decreasing. After the first 10 years, you'll actually, in the beginning, from the inception of your actual contracts, you would have $300,000 of coverage. After 10 years, $100,000 would drop off, and that $100,000 amount of life insurance would drop off, and also the price will drop off, meaning you don't have to pay that remaining price for another 20 years. After 20 years are up, then another $100,000 drops off. And then for that last 10 years, then you have that $100,000 sitting there. So as if you are paying down your mortgage, you're splicing it up properly, but you do not have to go to the discretion of just that company that offers a decreasing term life insurance. You have to think of it at a different angle and kind of conceptualize this at a different angle and say, rather than just having a 30-year policy that's going to have a decreasing term, this monthly price might cost you, I don't know, $100, but doing the laddering strategy might only cost you $60. And also, everything, it drops off after every 10 years, as well as this will constantly continue to be there. So this is just a little quick technique that I wanted to at least unveil to you guys and reveal, and just kind of let you know that it is possible. And what happens is, with 10-year, 20-year, and 30-year term life insurance, you have so many companies that are trying to bid for that business that they offer the most competitive rates, rather than a handful of companies that might offer decreasing term life insurance. If you just purchased a home, if you know that you have a debt, let's say you have a 20-year debt that is going to be paid off within those 20 years, give our number a call, our 1-800 number a call, because we leverage hundreds of the top carriers in your area. It's 1-800-566-1002. We recently implemented, in April of 2014, we implemented 24/7 customer service. And meaning that you could give us a call on a Saturday or Sunday, and we'll make sure to give you a quote within minutes. We'll explain to you how the coverages work, and we could get you set up with your policy and get you set up with your contract, within minutes, and try to get you bound within a couple of days. So once again, 1-800-566-1002. My name is Derek Afasi. I want to thank you very much for watching this video. Please subscribe to our YouTube channel, and so you could get the most updated videos. Thanks, guys.